guys, welcome. Today's question comes from Martin in San Diego, California. He asks, my worker wants to be a 1099 contractor. They're doing the same work as my other employees. Is it okay to pay them as an independent contractor? Well, good question, Martin. I get this question a few times a year, and it's typically around year end when our business clients are getting ready to send out 1099s and W-2s to their contractors and employees. Before you make a decision to bring on an employee or use an independent contractor, you need to make sure that you understand the difference between the two. Since each situation is different, the IRS has provided a number of factors to consider when determining if a worker is an employee versus a contractor. Generally, a worker is considered an independent contractor if the employer only controls the outcome of the project, and the worker controls what will be done and how it will be done. You must consider all evidence to determine the degree of control the employer possesses over the worker. The IRS has provided well-defined guidance on what constitutes an employee, which they have broken down into three distinct categories: behavioral control, financial control, and relationship of the parties. Let's look at the IRS's description of these three factors used to determine employee status. Alright, so let's pull up the three factors here that are used to determine an employment status. First, let's start with behavioral control. So, a worker is an employee when the business has the right to direct and control the work performed by the worker, even if that right is not exercised. So, behavioral control categories, the IRS has listed out 4 categories here. So, let's go and run through these real quick. Type of instructions given, such as when and where to work, what tools to use, and where to purchase supplies and services. That would dictate more of an employee status if the employer has control over those aspects. The degree of instruction. So more detailed instructions may indicate that the worker is an employee. Less detailed instructions reflect less control, indicating that the worker is more likely an independent contractor. Evaluation systems to measure the details of how the work is done points to an employee. Evaluation systems measuring just the end result point to more of an independent contractor relationship rather than an employee. Training a worker on how to do the job, or periodic or ongoing training about procedures and methods, is strong evidence that the worker is an employee. Independent contractors ordinarily already have these methods, and they use their own methods to perform the job, which would dictate more of an independent contractor relationship. Next, let's look at financial control. So does the business have the right to direct or control the financial and business aspects of the worker's job? So consider the following methods and categories. So significant investment in the equipment the worker uses to control someone else. So if the employer is providing all of the equipment, then this really is a big factor in determining that this is more of an employer-employee relationship rather than independent contractor. Unreimbursed expenses. Independent contractors are more likely to incur unreimbursed expenses rather than employees. Typically, if you're an employee, you would be reimbursed by your employer if you incurred expenses while on the job. Opportunity of profit or loss is often an indicator of an independent contractor. So as an employee, you're pretty much guaranteed a wage. If you're an independent contractor and something goes wrong on the job and there's an opportunity for a profit or a loss, that really dictates more of an independent contractor relationship. Services available to the market. So independent contractors are generally free to seek out business opportunities. When you're an employer or an employee of a company, it's typically frowned upon if you're going out and looking for other jobs while you are employed with one company. Method of payment. So an employee is generally guaranteed a regular wage amount or an hourly, weekly, or periodic time, even when supplemented by commissions in addition to their guaranteed wage. Independent contractors are most often paid by the job or by a flat fee. This is again a financial control method, and it's often a significant indicator of an employee versus an independent contractor. Next, let's look at relationships. So the type of relationship depends upon how the worker and business perceive their interaction with one another. So there's four qualifications here that the IRS provides. First is written contracts, which describes the relationship the parties intend to create. So a contract can't be the sole method to determine a worker's status. You can't just say, okay, you're a contractor, here we're going to write this up. So although a contract stating the worker is an employee or an independent contractor, that's not sufficient evidence to determine a worker's status. Next is benefits. So a business providing employee type benefits such as insurance, pension plan, vacation, or sick pay typically indicates an employee-employer relationship. Businesses generally do not grant these type of benefits to independent contractors. Next is the permanency of the relationship. This is a very important factor. So an expectation that the relationship will continue indefinitely rather than for a specific periodic time is generally seen as evidence that it is intended to be an employer-employee relationship versus an independent contractor. So if it's just, hey, they're going to come work for us for an indefinite period of time, that's typically an employee versus an independent contractor. Services provided, which are key activity of the business, to the extent to which these services performed by the worker are seen as a key aspect of a regular business of the company. So this means if it's someone working at your front desk, or this is a retail person that's going to be behind the desk greeting customers, this is a key person in your business. This is typically not filled by an independent contractor. So even though you want to classify them, the relationship dictates that this is more of an employee-employer relationship versus independent contractor. So that's it, guys. Those are the three factors to help determine if a worker is an employee versus an independent contractor. Now, you have to look at these factors on an employee or a worker-by-worker basis and determine, for yourself if you think they are an employee versus an independent contractor. Take a look at it from the IRS's standpoint as well. They would much rather your workers be employees because you are withholding their payroll taxes and submitting them timely, rather than them having to chase down independent contractors for those same payroll taxes. So those are the three factors: behavioral control, financial control, and relationship of the parties. So go through those and determine if each worker is an employee versus an independent contractor. Just because a worker comes to you and says they want to be an independent contractor does not mean that they should be. So definitely do your due diligence. Make sure that you're checking the list to determine what or how they need to be classified. Thanks for the question, Martin. If you have any tax or business questions, please ask in the comments below or submit a question through our website, askacpa.co. Thanks so much for watching, and we'll see you tomorrow.